Hello, and welcome to another episode of Copper Bottomed. My name is marr-johnson. It is the 15th of October today, and I was trying to get this out at the end of September, but I've been in Chile doing a whole bunch of stuff with Fitzroy Minerals. So here I am in the middle of October, a few weeks late. Loads going on in the copper space. These charts are as of the end of September. Or the beginning of October, you can see the copper price continues to improve. We're at around $5 per pound now. When you compare so that's the 20-year copper price. When you compare the stocks for the last couple of years, this is just from 2024, you can see that in Q4 of this year, we are seeing stock drawdown and metal prices rising. It was quite similar last year. When you get that stock drawdown, you do get a sustained copper price rises, and the copper price typically performs quite well at the end of the year, each year as stocks come down. So we are in a go time for commodities, and copper stocks are going down. So hold on to your horses. This may not be the silver market, but it is still going to be a good market. Here you can see the gold and copper price. I said that gap was going to close. The gold price has run off again. I think it will close in due course. The copper price will catch up. These are rebased prices, these kind of indexed prices, but it kind of suggests that we could be looking at $6 a pound when copper eventually catches up with gold, which I think it will do, certainly above $5 a pound. So that's all quite good. However, of course, note of caution, the copper price in real terms is still on a decline because the producers are pretty good at, or they have been in the past, at producing copper on a global scale. There are significant headwinds to that long-term trend, however, and I will touch on some of those as we go forwards. So, looking at the copper supply and demand fundamentals, there's been a ton of news in the last 6 weeks since I last did the previous Copper Bottomed. In general, one could say that forecasts are improving. Goldman Sachs recently came out and saying it's cut its global copper supply forecasts. They reckon supply is down 160,000 tons net in 2025, and it will be down 200,000 tons net in 2026. This is just a snippet from the Reuters reporting of that. Goldman Sachs expects copper price to remain in the $10,000 to $11,000 per ton price range in 2026 to 2027. That basically is a classic big bank commodity analyst who just is looking at the forward curve, which is just saying, or looking at the spot price, because spot prices are there. So that is not a forecast, but people seem to kind of rely on these things or put much weight on these things or great store. This is perhaps more relevant. Kenny Ives, who's the Chief Commercial Officer at CMOC and the CEO of the trading arm, and he's actually a candidate potentially to be a CEO of Glencore. He thinks that copper prices could reach $12,000 a ton, which is kind of $5.44 per pound, before the end of 2025. So looking at that pickup towards the end of the year, he describes himself as nice and bullish on copper prospects and copper's prospects, which I like. The International Copper Study Group has put out new numbers. They are typically very cautious, but interestingly, they see the 2025 market in surplus and the 2026 market in deficit. I'll show their slide. I'll show their full table on the next slide. Just a couple of other snippets. Codelco still maintains its full year 2025 output at about 1.35 or 6 million tons per annum, or million tons this year. And there's problems in Australia. Who'd have thunk it? The Australian government has taken lots of long-term decisions to make sure that the electricity prices rise. And guess what? An energy-intensive business like a smelter business is about to go bust. Who knew? They must be taking lessons from the British government. Meanwhile, at the coalface, or on the copper mine, so to speak, there are ongoing supply disruptions. We had that tragic loss of life at Grasberg, an inflow of wet material, the mud flow I'll talk about this more, but basically this year it's about 270,000 tons of copper production lost this year. El Teniente, that rock burst incident and loss of life there, about 48,000 tons lost from that. Teck is having ongoing issues at Quebrada Blanca. They've just cut it. Interesting, while they were doing the Anglo Teck merger, they announced the downgraded their production forecast from Quebrada Blanca. I mean, it's just you couldn't make it up. But there's about 40,000 tons lost there. Obviously, that can all be made back up with the Collahuasi unlocking of value there. So, but that is a separate subject. And Ivanhoe's lost about 180,000 tons from the flooding incident. So you're looking at about 500,000 tons, maybe a bit more lost. I mean, the Ivanhoe losses here, it's quite a wide range they gave. It's about 150 to 230,000 tons. So I just picked a number in the middle, 180,000 tons. But 500,000 tons just lost from these mine incidents. Now, Javier Blas, who's a brilliant analyst and journalist, he, of course, says this is the wrong kind of bull market because these are supply disruptions. And when they come back on, the market's going to be in balance or equilibrium or possibly surplus. However, I would say that when you look at a roughly 24 million ton per annum market, or it will be next year, 2% growth in demand says that we need another 500,000 tons or 480,000 tons on an annual basis, which is a big mine. And even if, okay, let's say 2025, we've lost 500,000 tons here, that's 2% growth. If that all comes back next year, which it won't, because Grasberg is going to take a long time to come back on, as is El Teniente. But we'll come on to that because I've got a section on block caving as well. But we basically need 500,000 tons of copper, a new big mine every year until 2050. And the mines get bigger, the 2% grows and grows as the size of the copper market grows. Now, of course, that's just on a 2% growth rate. But with AI, electrification of society, and any push by governments to decarbonize their economies, was going to lead to more copper demand than 2% growth. Right. Of course, Robert Friedland's been on social media. He's bullish copper. Who'd have thunk it? Actually, the Ivanhoe share price has recovered very nicely after the incident, the flooding incident. This was a good graph. I'm not sure who produced it. I couldn't find a source, I'm afraid. I think it was one of the bigger groups. I saw it on LinkedIn and I just copied it and dropped it in. I flipped it around so you can see these mines more clearly. So Grasberg, that's I had output affected. So is Cocula, El Teniente, Cobre Panama still offline, Quebrada Blanca down here. But if you look down this list of big names, I mean, Escondida is famously, they got 1.3 million tons per annum this year, but if you look at their forecast, it's 1 million tons. So we're looking at a 300,000 ton per annum loss from Escondida going forward. Collahuasi should do well. Take it from Garomi. A lot of these mines are quite large, and they're not going to suddenly provide us with another 400 or 500,000 tons. Pretty tight on the production side. I had a look at the Codelco presentation that they put out their first half results in September. It's an interesting presentation. This is a parastatal, it's a state company. They talk about three phases of the company. One was nationalization in 1970s. Two was the kind of the period of growth with the mega mines in the 1990s. And now they're talking basically about optimization, which to me looks like stagnation. It's balance sheet repair. Their funds are regularly taken out by the government. It's used as a piggy bank by the government in Chile, which means that this company is permanently cash strapped, and they're looking at now private-public partnerships. They're looking at a lot of joint ventures with Western companies. But I mean, Chuquicamata Underground, yes, they're extending mine life, but it's not going to increase production. Andina, again, it doesn't really increase production, but it does push it out for many, many years. Again, this is a big old open pit. They're doing a pushback, and they get more years of mine life, but it's not a huge amount of growth. And El Teniente ramping up in the first half, but they had that accident as well. So growth for Chile's largest miner is tricky, but they've got lots of plans to maintain production. Incidentally, I was at Latin Rocks, which is a South American exploration and geology technical conference in Chile. And I was talking with a geophysicist with whom we're trying to do some work, and they said that they're super busy with people like Codelco, who are trying to get as many surveys done so they can rank their properties, so that they can drop properties, because the cost of holding on to exploration properties for a long time without working them in Chile has gone up. So people like Codelco, who've got these huge land packages, are looking to turn over their properties, drop the least prospective, hold on to their favorites, and then we're going to see more turnover in places like Chile. Oh, by the way, through this presentation, I've dropped in this little flag just to show you that there's so much going on in Chile, just to remind you that it's one of the hot copper places. There we go. There's the flag again. Right. I thought while I was in that presentation, I might as well show you what's happening at El Teniente. Basically, there's loads of these kind of mineralized breccias which have come up here, and this is a big sterile block in the middle, which is a very competent rock mass, and it's called the Brady Breccia, and the productive assets around the edges. Now, in red here, where I think this is the area which has been blocked out, and this is not. So this red area is the bit which has been sterilized by the seismic activity. And so these areas are fine to continue working, and they are in the yellow and the gold. These are where they are considering going back in. I think I've got that right. It's possible that I haven't got that right, but I think that's right. It's this red area is the bit which has been affected by the operation. And here they're saying 30,000 tons of fine copper loss in 2025. Earlier I said it was 40,000. Let's see what actually happens. Right, block caves. This is a plan view of the Brady Breccia. That's probably about 500 meters across, maybe a bit more. And this is the subsidence at the surface that you can see if you go onto Google Earth or Google Maps. You can see access tunnels and kind of wall stability through here and roads. So this is probably at least a kilometer across. Now, in a block cave, one of the most important things about block caving is that you have very, very, very stable and very disciplined drawdowns. I highly recommend that you watch a 2 or 3 minute video by Epiroc. Just type in block cave Epiroc video and it'll pop up on YouTube, and it'll show you how the undercuts are made and how the drawbells are made and how the fracture patterns are made. The crucial thing in a block cave is that you get this very even fracturing, and that the companies, the operators know the stresses within inside the block cave to get this even drawdown. You have to be disciplined. The way to wreck a block cave is if you create uneven stresses in the cave, in the collapse zone, in the cave area, and you pull things down at different rates. So if you've got people who want to high grade and to kind of pull down from a certain drawbell, which is high grade, you're going to create significant long-term problems, and you can cause blockages, and you can sterilize your block, your block cave area. Now, in the mega mines, in the big ones like Oyu Tolgoi or Grasberg or El Teniente, you would have several of these blocks operating at the same time. So you'd have a block cave 1 and block cave 2 and a block cave 3, and each one of them will have their own undercut system and their own. So at the base of these things, you have your access and your extraction network. Now, commonly, you will share that access with the various blocks, block cave 1, block cave 2, block cave 3, etc., will use the same network. So when you have a flood, as you have had in Grasberg, for example, you will flood the entire access network. So that's why it takes so long to sort out. Here at El Teniente, you've got a very, very different, you've got a very unique situation. First of all, this part of the Andes is a very high stress regime. So the rock stresses are extremely high. And then you've got this sterile, very competent breccia pipe, which is sitting in the middle. That it sits like this giant cone in the middle here. Now, what that means, forgive the plane going past or the helicopter, it might be Keir Starmer going to check us, who knows. What you've got with this Brady breccia here is, even though it's competent, but when you're doing a block cave around the edges, you're creating a void here, which has got significant stress coming in from the outside, but it's a very uneven stress pattern because you're not fracturing this portion in the middle. So it's one of the hardest block caves in the world to do. Codelco are doing a fantastic job. And I spoke to, again at Latin Rocks, I was speaking to a driller who's done a lot of work down here. He says, you'll never get it completely safe. And you won't get it to the level to that kind of Western standards would be comfortable with doing. You'll never be able to get it to a point where a listed Western company would say, we've done the risk assessment, this is going to happen, this is going to be fine. It's just slightly more dangerous than that. But I think it's too important, and he thinks it's too important, and several other people think it's too important for Chile's production to ever close down. So there you go. It's pretty cool that you can see it from the surface, huh? Anyway, so block caves. Remember how important it is to be disciplined and to draw everything down according to the plan. You set up your 10-year, your 20-year drawdown plan, and you have to stick to that. Discipline in a block cave is absolutely key. Where are we? Have I got anything on? I might as well skip straight across to Freeport-McMoRan here, because talking about block caves, I was looking for images. It's quite hard to find. I think this is the block cave. Here we go. Infill drilling of Grasberg block cave and Kusing Liar resources. They're talking. So this is a slide from the Q2 presentation. So they're looking at doing infill drilling here and here. So this must be the block cave, right? And there's the cross section there. So this is just a snippet from a separate news release which came out in September after the mud rush. Okay, future, and I've just gone straight into the bit about future production. The incident occurred in the B1C, one of 5 production blocks in the Grasberg block cave. It resulted in damage to infrastructure required to support other production areas in the GBC. So that's the access levels that I was describing, which will run under this whole area through here. Freeport's evaluating the future production plans. Forecasts will be revised to incorporate scheduling of required repairs and a phased restart and ramp up of production. So when you get a mud rush of 800,000 tons, volumetrically it's not that big. It's 1 million tons, let's call it. But the damage it does to the electrics, it's just an absolute brute to clear. And also, it makes you worry. If you're in a super high rainfall area and you've had this mud rush come through, it'll change the fracture dynamics, it'll change the permeability and the porosity, it'll change all of you might have to kind of recalculate your block caves, but also you've got to re-stress your engineering. How did it happen and how do you stop it happening again? And it's really hard in a high rainfall environment. The bits I've put in bold. Currently, Freeport expects the unaffected Big Gossan and deep MLZ mines could restart by about this time here. So this is the Big Gossan must be through here, and this is the deep MLZ. So these guys can start. This is the bit which is affected, and this bit is not, it looks like, or not so badly affected. As a result, so by mid-4th quarter, with a phased restart and ramp-up of the block cave beginning in the first half of 2026. As a result, 2025 sales of copper and gold from the fourth quarter will be insignificant. Previously estimated sales of 445 million pounds. So that was the 200,000 tons, I reckon, that estimated that was going to get lost from that. Right. In the first half of 2026, a phased restart and ramp up of the block cave could initially start in 3 production blocks, PB2 and PB3, possibly followed by PB1S in the second half of 2026 and the balance of PB1C in 2027. This would target the return to pre-incident estimates in 2027. Wow, so that's a long time away. However, remember that block caves are tricky animals, and when you change the stress dynamics and when you change the drawdown rates, actually it's worth remembering that block caves can freeze. So if you don't have continual drawdown, you can actually sterilize a large area of a block cave. You can't actually go back in and unblock it. Freeport go on to say that the ramp up and the restart is subject to a number of factors and could change. Certainly could. And they're looking at production in 2026 to be approximately 35 lower than pre-incident estimates. And the previous production estimates were about 1.7 billion pounds of copper, whatever that is, 800,000 tons of copper, something like that. Right, where was I? I had jumped around a bit. So after the block cave, let's go to the other incident, which of course is Ivanhoe Mines, market cap $22 billion. This was from mid-September. They said production guidance once stage 2 dewatering is further advanced. They've got their water declining, but my goodness, look at the size of the power that is required. So first of all, look at the pumps. They've put in 4 of these pumps. These are 12.5 meters tall and 1.5 meters wide. These are big beasts. They put in one in here, one in here, one in here, and one in here. Look at the power that's required. Total pumping rate out of Kakula is expected to increase up to 6,400 litres per second. Oh, I didn't put the power notes in here, but basically it's kind of a 20 megawatt power demand to keep these pumps going. So it's a huge amount of electricity is required to get these dewatered. So watch that space. They'll do it. I mean, they've got huge experience. I mean, the Kipushi zinc mine, the big zinc that they've also got, that also required vast amounts of dewatering. And this whole Congo basin, I mean, I remember visiting Mufulira in the about 99, I think it was. It's basically a kind of a water operation. You've got these huge aquifers running underwater, massive pumping to make sure that these mines don't flood. So growth is difficult. Right. Again, I just thought I'd put this in because, of course, Los Bronces is owned by Anglo American and Mitsubishi and Mitsui and Codelco. It's kind of 50-50 with Codelco there, and Andina is fully Codelco'd, and they're looking at using conveyors to get ore from Andina to Los Bronces. There's a big unlocking of value here. I mean, look how close these things. They're just cheek by jowl. So I'll look into that exactly to see how much copper will be freed up there. But that's a good brownfields release of copper. That's the kind of thing that we're talking about. Right, cracking on. This is the International Copper Study Group table. This is their supply and demand forecast, or rather it's the copper usage and supply forecast. They are showing 1.4% growth in 2025 and 2.3% growth next year. Refined copper production, they're saying, is strong this year, but next year is going to fall. And they are looking at demand growth of 22.7% last year, 3% this year, and 2.1%. And so this is about 500,000 tons of copper growth per annum. So this brings me on to Capstone Copper. Quite an interesting story here. Capstone Copper market cap $9.5 billion Canadian. So it's that close to $7 billion US. They've announced a $360 million investment from Orion for a 25% interest in Santo Domingo. So you may recall that Santo Domingo, it's an asset. It's about 35 kilometers away from Monteverde mine, and Capstone has effectively been trying to sell this for the last few years. They started a process in, I think it was August 2023, and actually they've been trying to sell this for this asset's been on for sale for a number of years, probably since 2010. Anyway, so that's what's that, 15 years. Right. A feasibility study was completed in 2024 by Capstone. The engineers were Olsenko, who know what they're doing. The deal is interesting because $360 million for 25% puts the value of this asset at whatever it is, 1.4, just under billion dollars US. It's an asset that will produce 68,000 tons, 65,000 tons of copper per annum. So it's a good deal for Capstone. It's a good deal for Chile. Look at this. Santo Domingo is expected to generate close to 6,000 jobs during construction and 1,000 jobs on a regular basis, as well as $2 billion of in-country taxes paid in Chile over the life of mine, as per this feasibility study. And this money means that there's a kind of a clearer route to a final investment decision, because it means that Capstone can do the rest of the capex through their balance sheet. They've already got a loan out there, or a plan out there to take finance from Wheaton to help with this gold. Well, the Wheaton are going to stream the gold. So it's interesting. This is a really interesting asset, perhaps not in a good way, because it's quite low grade, 0.33% copper, which is okay. $2.3 billion capex. Look at that, the FE grade, and only about 60% of the value or the revenue that they're forecasting for this project comes from copper, and 30% from iron, which is a very strange thing. If you just run the capital intensity on the copper alone, not on the copper equivalent, i.e. discounting the revenues you're going to make from the iron and possibly from the gold, this pushes the capital intensity up to $34,000 per ton, and it will certainly reduce that IRR. If you include the sustaining capex, then it's way higher. It's kind of $50,000 a ton. So it's highly dependent on that iron ore. Interestingly, there's a bullet payment of $20 million on contained sulfide copper. So in reserve, 268,000 tons in proven and probable reserves, which obviously needs some more work to get to that level. Interestingly, that's only 4.5 years of mine life at 65,000 tons per annum. There's another $20 million bullet payment kind of contingent on the full feasibility study demonstrating processing of oxide material containing at least 159,000 tons of copper. So remember, these oxides will be trucked 35 kilometers down to Monteverde, and these sulfides will be a standalone project, again, entirely reliant, I think, on this iron ore. It's a bit of a push to describe that as iron ore, but there it is. And just a few more comments on that iron ore. Really, if you get into the business of magnetite concentrates, it's just a kind of a huge minefield. This is these are a couple of screen grabs from Google Maps, and this one anyway, the Candelaria mine. So this is the Favelas Candelaria. There you go. That's the offices of Candelaria. This is the big Candelaria open pit. There's a underground mine underneath that. What you can see here is the town of Tierra Amarilla and Punta del Cobre, and this is where kind of many people live in this town here. This is the waste rock dump ground. You can follow the mine path of the trucks. They come up here and they dump it at the top here. There's no space for Candelaria. Candelaria is really, really short on space, as is so often in Chile. One of the key things you've got to look for is can you where can you store stuff, and have you got the environmental approvals to store stuff? This is the magnetite plant at Candelaria, and this has got a 90-year environmental permit to do that. And this plant here, this is the magnetite concentration plant. It takes the tailings dams, it takes the tailings from the oil process plant, which are in here, and it puts it through a magnetic separation. And remember, this is already ground down to a fine level. They might need to grind it again. I haven't actually looked at the process, but this is a photograph from CMP, which is a subsidiary of CAP, which is the Chilean kind of iron ore mining company. It's very hard to get numbers on this, but this is the big magnetic separation plant. They put it into a slurry and they send it via pipeline 120 kilometers to the coast, and it's then sold as pellet plant, and they sell about 3 million tons per annum. They can probably get up to 3.5 when the iron ore price is high, and they pull it down to 1.8, 2 million tons per annum when the iron ore price is low. Anecdotally, I've heard that this is very, very marginal. It's a very, very marginal operation, and they just about make money because they can use tailings, which is already ground and down to size. So I'm not sure how the economics are going to work on the Capstone asset. Maybe that they can separate the magnetite efficiently from the tailings, and they can make some money on that. But crikey, with a kind of iron ore grade of 27%, it just all seems really, really, really hard. So if you're looking at Capstone copper, if you're looking at Santo Domingo as a kind of a money-making exercise, it does make me wonder how it's all going to work. It just seems really, really tricky. I mean, as soon as you start putting iron ore magnetite into a pipeline, you've got to be looking at Blaine indices, you've got to be looking at abrasion, pumping stations, handling of pellet feed at the far end. I mean, typically what you'd do is you'd pump to a pellet plant, but transshipping pellet is a complete nightmare. But it can be done, and these guys are showing that it can be done. So good luck. Obviously, it shows me that having a good, clean copper asset, either copper oxide that can produce copper cathode, or copper with a gold credit, or copper with a moly or gold credit, that's what I prefer, and I think everybody else would prefer as well. But anyway, so that is that on Capstone and Santo Domingo. Interesting developments. Thank you. Other news, Ben Pullinger and team have done well at ATEX. They published mineral resource estimate upgrade, an updated MRE, 475 million tons of 0.88% copper equivalent. That's a good grade. And it's gold and moly and silver, and 1.5 billion tons of 0.75. Right. So they call this a globally significant copper, gold, and silver mineral resource. Correct. This is their contained copper. I put it into millions of tons because that works for me. 2.7 million tons of copper in indicated and 7.6 in inferred, 3.8 million ounces of gold in indicated and 9.9 in inferred. So that is a useful contribution, particularly these gold prices. Of course, this B2B, this is where you are likely to, this is where they plan to start the operation. The top of this is, I think, 175 meters from the portal level in vertical height, and the bottom of this is about 375. So you would have to go down 375 meters and then come in to start this extraction here. And this has got 28 million tons at 0.95% copper, 0.33 gold, 2 grams silver, and 130 ppm moly, which we like. So that's an indicated and a little bit more an inferred. So that is where you would kind of get started. And the other thing I wanted to look at here is look at these colors, okay? So you've got, this is above 0.8. There's a lot of above 0.8 material, and it's open to the west and to the east and to the north and to the south. So these things are open on the edges. They haven't done a lot of drilling around the edges. The system can get bigger. Crucially, there's a lot of low-grade material in the mix. So what that means is that if you do a block cave and you get dilution, you're going to get dilution with lower-grade material, but it's still running. So it's a really impressive system. It's high up in the Andes. It's not coming out of the ground anytime soon, but well done, team. That is good. Freeport we've looked at. Yes, I'm just going to wrap up by saying we continue to make progress at Fitzroy. I haven't got time to go through all of the exploration results of all the other companies, but we did put this out in late September. We've extended this mineralized zone, so it's now 1.4 kilometers through here. We're picking up mineralization in here. We're now drilling in this kind of gappy bit in the middle here. All rather exciting, particularly when you think that the oxide resource in the Capstone copper asset, the thing that they were getting excited about was to be able to process 160,000 tons of copper in oxides, and I mean that's a chunk of oxides, but and that was with a capital intensity of $22,000 per ton. There are so many infrastructure advantages here, including an existing process plant and transmission lines and all of that we announced in this news release from the 29th of September, I think it was, maybe it was the 25th, maybe it was the 29th. 29th of September, that we're going to be pushing ahead with a PEA. Even though we haven't got a resource on here yet, we're going to be looking at some pretty exciting developments and routes to get this into production without significant capex, so reducing that capital intensity, and crucially by getting someone else to do it for us. We don't want to be miners, but we do want to be able to be participating in a potential production scenario. So we'll be working on that PEA through the course of 2025 and 2026. Here's Gilberto speaking at Latin Rocks last week. It was a really good event. He spoke extremely well about Buen Retiro. Many people came up to us afterwards, said that they had no idea about this project, the Buen Retiro project, and they were quite excited. We had some very funny chats with the Candelaria geologists who liked what they saw when we were showing them photographs of our core. And this result, 133 meters at 0.46 through here, this made it into the best weekly copper drill intercepts in the first week of October or the last week of September. So all go there, and I will provide you with another update on Fitzroy Minerals at another time. But shameless plug for Fitzroy Minerals, but very interesting dynamics in the copper market as a whole. It should be a really good few months and pretty good 2026 as well. And of course, I'm bullish copper on the long term. So short, medium, and long are all looking good. Hang in there. Stick with it.